In the wild world of startups, there's this key player who often works behind the scenes, the angel investor. They're the ones who show up early, write those first checks, and really bet on an idea before anyone else will. So today, we're going to decode exactly who they are and why they're so incredibly important.
Okay, so let's just start with a hard truth. We all know most startups, well, they just don't make it. It's a tough reality. But if you look at the ones that actually survive and thrive, what's that one thing that often sets them apart?
And yeah, you guessed it. That difference is very often an angel investor. But their impact is so much more than just a bank transfer. They are a really fundamental part of the success story. So let's break down who these people are and what they really do.
I like to think of them as the startup's first true believer. Long before a company is a sure thing, way before all the numbers look perfect, they're the ones who step up because they see the potential.
So here's the textbook definition, but let's make it simple. An angel investor is an individual, not some big firm, who uses their own personal money to back a really young company. And in return for that risk, they usually get a piece of the business, a stake in its future.
And their involvement? It makes a huge, measurable difference. Check this out. Startups that get angel backing have a 14% higher survival rate. In a game where most teams lose, that is a massive advantage.
But, and this is maybe the most important takeaway, thinking of them as just a walking wallet is a huge mistake. The real magic happens after the check is cashed. So what else are they bringing to the table?
It really comes down to three main pillars of support. First, of course, there's the money, the financial backing. But arguably, the next two are even more valuable. You get hands-on business guidance from their own experience, and you get access to their entire network of industry connections. That can be a total game changer.
Let's dig into that a little bit. That investment is usually somewhere between, say, $25,000 and $100,000. But the mentorship on strategy, the introductions to key partners, or even the next round of investors, that's priceless. And their terms are often way more flexible than big firms.
And this brings us to a really key distinction. How are angels different from venture capitalists, or VCs? Well, think of it this way. Angels use their own cash to get in super early, and they're focused on mentoring. VCs come in later with a huge fund's money, write much bigger checks, and they are laser-focused on massive, fast growth. Two totally different worlds.
Okay, so let's flip the script. If you're a founder, how in the world do you get an angel on your side? What are they even looking for? It's kind of like a test, right? They're searching for specific signals that tell them this venture and this founder has what it takes.
So what are their top priorities? Now, this might actually surprise you. The number one thing they look at, above everything else, is the founding team. That's right, before the product, before the market, they bet on people. After that, of course, comes the market potential and whether or not the business is a good fit for their own expertise.
And when it comes to that team, it's not about finding someone who has it all figured out. It's about self-awareness. I love this quote. The best founders know their weaknesses. An investor wants a leader who knows what they don't know and is smart enough to build a great team to fill in those gaps.
Now, for that second priority, market potential. This number is, well, it's pretty sobering. 42% of startups fail for one simple reason. Nobody actually wanted their product. There was no market need. So an angel is digging deep to see if you've found a real problem that people are genuinely willing to pay to solve.
And finally, that idea of alignment. This isn't just a transaction. It is a true partnership. The absolute best-case scenario is when an angel has deep experience in your industry, because their advice and their network can pour gasoline on your fire and just accelerate everything.
Okay, you know what they're looking for. So how do you actually go about building that partnership? I'll give you a hint. It's not about one perfect pitch meeting. It's about forging a real, genuine alliance over time. Look, before you even think about reaching out, you've got to do your homework. That means you need a rock-solid pitch deck, you need to know your business and your numbers cold, you need a crystal-clear idea of how much money you're asking for and why, and you need all your paperwork ready for them to review.
Alejandro Cremades said it perfectly here. He compares the relationship to a marriage. And it's so true. It's a long-term commitment. You're going to go through good times and bad times together. And it absolutely requires trust, open communication, and shared values to work.
And building that trust doesn't happen overnight. The best approach? It starts a full year before you actually need the money. You start networking, you send them short monthly updates on your progress. That way, you're not just a random person with a slide deck, you're a developing story they've been following and are already invested in. So let's just zoom out for a second.
The impact of one angel putting their faith in one small startup, well, it creates this ripple effect that has a lasting legacy on the whole economy.
I mean, the numbers really speak for themselves. Angel-backed companies create 40% more jobs than their peers. They have that 14% higher survival rate we talked about, and they're over 10% more likely to have a successful exit, like getting bought or going public. This is real, tangible growth.
And this quote from Paola Bonomo really gets to the heart of why this is so critical for innovation. At that super early stage, you're not just looking at a spreadsheet, you're funding human potential. You're investing in a team, a vision, a certain kind of energy.
And at the end of the day, that's their essential role. Angel investors build a bridge over what people call the valley of death in funding. That huge, scary gap between a founder's own savings and the massive checks that VCs write. Without that bridge, so many great ideas would just disappear.
So, to wrap it all up, angel investors are so much more than just money. They are mentors, they are connectors, they are the first believers who give founders the capital, the guidance, and the confidence they need to turn a bold idea into a real, thriving business.
And that really just leaves us with one final thought. Right now, somewhere out there, the next world-changing company is just a tiny idea. And the big question is, will an angel investor be the partner that gives it the chance it needs to get started? Based on everything we've seen, I'd say the odds are pretty darn high.